Last year's meme stock mania, propelled by social media, piqued this 19-year-old's interest in investing.
That intrigued me as to how the stock prices could go up and down this quickly and at such high rates, So that sort of led me to sort of dive into the researching aspect of it, understanding the quantitative and qualitative reasoning behind why everything goes about and how it goes about in the stock market. And that eventually led me to actually try it.
Jung Woo has since moved on to longer-term investments.
My portfolio mainly consists of growth stocks that I see having high upside potential in the future, and currently that require less capital, as you know, I'm a student. So as for how I decide what to put my money in, I take a look at the company's fundamentals, for instance, their income statement, cash flow, and their business models. But what really plays like a huge role is their product or service being offered. If it is one that stands out from their competitors, regardless of how high the price is now, how low it is, I'm usually still going to put my money into it because I know that it will have a high potential in the future.
He's part of a growing group of Gen Z investors that are planning for their financial futures. One survey estimates that more than 54% of this group, between 9 and 24 years old, hold some sort of investment, with the pandemic accelerating their interest.
A lot have come to the market the last 2 years. Obviously, this year has been very rough on market, so I think a lot of them would have portfolios in the red. So it's a first lesson for them, right? Because when you enter the markets and you're riding that bull market, everything goes up. Almost nothing you pick is going to go wrong. But now the tough times, what do you do? This is the first lesson for a lot of them.
As this generation comes of age, traditional financial institutions are tailoring products to win over the Gen Z dollar. Prosperous is a digital investment service by CGS-CIMB that targets younger consumers who are starting their investment journey.
For this younger generation, they are less focused on what you call the safety and security aspects of financial institutions, right? The older generations, they're very clear. They want to put their money where, it's certified safe. But the younger investors don't really care. They are more than happy to throw money, offshore firms, fintech firms. It's just a lot of noise out there. So how do we cut through the noise? A lot of the younger investors, when they read a research report, they don't understand half of what it's saying. And they look at the charts, they don't get it. And so they lose interest in actual content that's good. So we come up instead with simple to read articles. We're still doing, stock companies, stock coverage, right? But our content team does, talk about why they like a certain company or they don't, right? And we leave it to investors to make their own decision, but we try and make things simpler to understand.
The focus is on personalization, sustainability, and a good digital experience for a generation that's grown up with the internet and social media.
I think we've seen some serious efforts by some of the traditional banks who are, of course, worried about about having their lunch eaten by fintechs and virtual banks. So banks in Asia, traditional banks, are introducing more initiatives to reduce, for example, their carbon footprint. UOB also has launched an AI-powered app called UOB Tomorrow, TMRW, with personalized digital financial services. So personalization is a huge thing for Gen Z. They want it to be tailored to them. You see also in Hong Kong, HSBC has launched similar digital tools to try to get to younger clients, and that was done last year. These also include investment schemes that start low. So in that case, it's 100 Hong Kong dollars just to start an account. And I think these are all ways that traditional banks have learned from the fintechs, because the fintechs were the ones who pioneered low fees for trading and for using their accounts.
But traditional institutions are also warily watching Gen Z's interest in often unregulated and volatile investments like cryptocurrencies and NFTs.
MES has spoken up about warning retail investors to be careful, yet we see this cohort jumping straight into that space a lot. So I think that's a trend that's not going to slow down. It is a bit worrisome, to be honest, because this is a generation that is obviously very digitally savvy. At the same time, perhaps a bit more financial education could be necessary.
For now, it's still too early to tell where Gen Z will flex their financial muscles. But with Gen Z expected to inherit trillions in wealth over the next few decades, experts say traditional financial institutions must cater to their demands or risk falling off the curve.
There's a hunger for personal finance information. Gen Z knows they need information and they need, financial education if they're going to make it. The challenges in tailoring the products that speak to them is not whether it's a newer bank or a funkier bank or a better ad campaign. It's really usability and whether that product or service speaks to them and is at the right price point.